Hello, 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 people. Hello, 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 hello.
Skype's picking me up and everything.
Wait.
What up, GB fam? What up, guys? We are about to get started. Oh, there we go. Good? We good? We Gucci Gucci? Let me pull up the stream here just so I can see y'all's beautiful chats. Alright, we good? Sound is good? What's up, guys? How's everyone doing tonight? I see that there's 88 people here. We'll wait till 100. Everyone tag your teams. Make sure everyone's in this call. Let's get this started. What's up, guys? Let me organize this little cord hot mess we have. Alright. Okay. what we will be discussing tonight. What I'm going to be going over tonight, just for the people that are already in here right now, is MetaTrader 4 basics. I've been asked before about people that don't even know how to specifically even call out a trade, much less know what anything is inside of the apps or the inside of the trading platform. So that's really what I'm going to go over right now. It's going to be basics of MetaTrader 4, and also stop losses and buy limits, buy stops, all that kind of fun stuff. So hold on one second. Alrighty. 147 what? Oh, okay. Well, it just jumped to 140. Okay, I saw 88 and then jumped to 150. That's what I'm talking about, guys. Alright, so tag your teams. What time is it? We're going to go ahead and get started. Alright, so we're going to get off of the scanner. We're going to jump on to Trader's Way. Alright, so pretty much like what you're doing here, let me go ahead and just minimize this as if we hadn't done anything. Like, I'm going to remove everything. So this is a lot of the times like what you can be looking at on MetaTrader 4 if you just open the program up, or anybody on your new team that signs up and joins and everybody downloads the program. I had to actually deal with this last night. So what I'm going to be going over starting is up here on the top left. Let's go ahead and bring back everything that I had just deleted. So for example, your data window. Oh wait, I'm sorry. Well, that's data window. It's not incredibly helpful. So we're going to go to view, and we need to have our market watch, and see market watch brings up all of the currency pairs. You want to go ahead and if they're all gone like this, you can see that you can delete any that you don't want, and if you want to bring them all back, you just right click in this area and show all, and then there they all come right back, right? So I personally, when I'm setting up my MetaTrader 4, I delete. I hear music. You shouldn't be hearing music. I'm sorry. You were hearing music. It's gone. Music's gone. Sorry, guys. I'm going to turn me down just a bit. Okay. Let's see. Is that better, guys? I killed the music. Alright. Okay, all good? Cool. Sorry about that. I can't hear the music. Only y'all can. Alright, so anyways, what I was talking about was just showing up on the currency pairs. I get asked a lot about that. So when you do actually, I'll do it one more time. You just go to view, and then you go to market watch, right? And so you're going to want to get rid of all of the currency pairs and the things that we don't use. So like this one, Japanese to 225, whatever that is, gone. Delete, all of these. We don't trade NOK, we don't trade DKK, whatever that is. None of these. All of these down here are just kind of like honestly a waste of space. So you just want to clean it up, make sure that you have the currency pairs that you'll actually even bother looking at. These different colors all up here, not good. So that's just that. So now you understand how you can bring up all of the currency pairs. The next thing we're going to do is bring up the navigator. Someone just asked, closed it out, thought, how do you use the pair with the scanner? I don't know. I don't know what you mean by how do you use the pair with the scanner. Oh, do you mean like pulling up the scanner? I'll let you get back to me on it. But okay, so now that you want to open up the navigator, right? Navigator is where you can click and drag onto any type of indicator or expert advisor that you want to put on, right? So that's all under navigator. That's under view navigator. So that's how you bring up the last two things. To bring up a naked chart, you can click file and new chart. I personally like just grabbing, if we were to look at the Euro to JPY, you just click and drag, and then it will bring up a naked chart for you. When you're on your naked chart, this is where, it primarily lies into where people can do everything that they want to do to their charts. Personally, I like to right click and get rid of the grid, first of all. The grid is just honestly a waste of space in my opinion, or not a waste of space, but just a waste of screen, because it's so much and it's not really helpful. The grid doesn't really help you in any way. So I like to get rid of the grid. and closed it out. Thought it was on E. Huh. Okay. Well, anyways, when I'm on my grid, I like to go to properties, chart. And so when I'm here, I want to make sure that I'm going to be changing my bar down to red. So then when you go in and you zoom in, you can see, the actual downtrends of the market. You're not looking at all green, because on a naked chart it'll always show up green on bear and bull candles, and you obviously don't want that because it's just confusing to the eye, especially to brand new people. So make sure that when people are just now starting out, that they are messing with their charts, in the right way, to where they're changing the properties and making it just easier for people, because there is no real training videos for MetaTrader 4. So as the people that we bring in for our teammates, we have to make sure that they're set up for success, right? So make sure that their charts are where they want to be. I'm going to get to indicators and expert advisors here in a second. And by the way, guys, y'all can ask me questions. Can you do that one more time? Got you, B. What are we doing one more time? Here, I'll close this chart out and I'll do whatever. I'll just do it all again. See, this is kind of like what our charts look like. I'll get to this, how it all looks and everything. But so if we were going to start out with a naked chart, here's a naked chart. This is always what it will always pull up 100% of the time. Can you do that again, please? How to change colors? All right, bet. So first of all, I like to get rid of my grid. That's right click, and then you just, you can bring the grid right back. It doesn't matter. But so when you want to change the color, you right click on the chart and then go to properties. When you're on properties, it'll show you every single color that you're using, right? So bar up, you obviously want green. Bar down, we want red. Or, honestly, whatever color. Red and green is, positive and negative. So bear candle, change that to red. No, not medium violet. There we go. So now, and then you just click OK. And see, up here, it'll start out with bar charts, candlesticks, or line charts. Everybody obviously likes candlesticks. So the candlesticks is this button right here. And when you zoom in, you can see that you're using candlesticks, lines like this, or like that. Obviously, nobody wants that. So candlesticks. These are part of the buttons that I'm going to be explaining. What's up, Metal Soul Mike? Change bar color, bar down, exactly. So that's what you're going to be doing when you're wanting to change that, right? So let's move on to the next thing. Up here, I'm just going to go move from left to right. This button right here, obviously the mouse is the mouse, right? The next thing is this crosshair, and so when you click on that, it brings up grid points that you can look at. So if you wanted to, say for example, look at from what this was to what this was, you can see how much the pips are, and the pips are the middle number. I don't know if you're going to be able to see this. You might have to blow it up, but 3717 is the middle number on this one particular measurement, right? And so what that is that it's 371 pips. You always delete the fourth number. The fourth number on when you're looking at this, just to see how much pips are, because it's honestly important a lot of times to measure, where the market goes and stuff, right? So it's the middle number. It's always 4 digits. Well, it's not always 4 digits, but you always delete the last number. So right here would be 380, down here would be 83, down here would be 28, and so on, right? So, and it goes away the second that you click off of it. So that is what crosshairs do. Thank God you started this webinar. I was going back to basics. Now is the moment. What is that button again? This button right here is the crosshairs. Crosshairs. It's called crosshair, and you can just measure. That's all it's for, is measuring. So when you're doing that, just so you know, you can, it's just incredibly helpful besides just looking to the right side of the screen and then seeing all the pip numbers over here, right? It's just easier. So moving on. All right, cool. All right, so moving on, we're going to go ahead and move to draw a vertical line. Obviously, it's a vertical line. Most of the time we use this to identify when London session is and when, like New York session as well. It's like when London starts and when London finishes is when you draw these horizontal or these vertical lines. You see, and you can put as many as you want. You see, You can put however many you like. So that's all that one is. Vertical line, or now we move on to horizontal line, and horizontal line is honestly one of the ones that you're going to be using the most, because this is how you identify support and resistance on your particular charts. Whatever currency pair that you're looking at, you're going to be using this to identify support and resistance zones everywhere on these charts, right? So what the best thing to do is to make them both different colors. So you draw support as red and resistance as blue. And how you do that is, let's see here, let me just bring up a brand new line. I'll go ahead and get rid of all these. I don't know why I brought up so many. Huh? Let me go ahead and get rid of them. And this is kind of tricky. If you don't have like a good mouse, you have to delete them. And that, I don't know if you're going to be able to see it, but on the top, you see right here, you'll know that you're clicked on it because it brings up like two little squares. That's the only way. It's a little tricky, but like as I said. So let's just say I wanted to, instead of delete it, I can move it. See? Alright, so I'm going to just say that right here, this is resistance right here, right? So I'm just going to go ahead and double click on this line. Then we go to properties. Horizontal line properties. And that's on the right click. So horizontal line properties, right here, style, color. So we change that to blue. Obviously we got a blue line now. So blue for resistance, support for red. These webinars, so Forex is buying and selling foreign currencies to gain a profit. Orizonu NA, yes it is. That's exactly what we're teaching here, is how to show people how to identify trends in these markets and then show people how they can make money off of buying or selling currency. I have never been able to delete my lines. Now you know how to do it. You just you have to double click on them like really well. See, like right now I can't touch those lines. Now I double click and you can see right here that it brings up that you clicked on it. So you're going to be square on that. And remember what I said, when you're identifying support and resistant lines, you want to have them as different colors, because eventually you're going to go back into your history of whatever graph that you're looking at, and they're going to start to kind of overlap on each other. So it's just good to know what the lines are. Don't use the same color, you know, mix it up a little bit, make sure it's, you know, all pretty and sexy looking and stuff. So that is all that is for. So that's the horizontal and vertical lines, right? So now a trend line is the next line. It's this diagonal line right here on the top left. What this is for is that you want to click, like for example right here, and you're going to draw. You see, you can draw that line, and so you can start to develop the treads and see like where they all fall in under treads like that. You see what those are for is obviously that you can start to see that it bounces off and up and down off trend lines. Excuse me, I have hiccups. That's all that those are used for, but those are extremely helpful when you start to see, you know, where treads can kind of start to go, because even if you draw them like way back here, theoretically this graph could end up making it back in here, you know, or anything that they can be used for. Utilize them. Utilize all the tools that they give us that people can, you know, draw with up here, because all of them, you know, not every single one of these up here is extremely helpful, but a lot of them are. So we're going to move on because that one's easy. Alright, and so the next thing right here is Fibonacci retracement. This is honestly your money maker. Everybody should be using Fibonacci retracement levels, because if you're not using them, then you're making it way more complicated for yourself. That's all I can say, because Fibonacci is like one of the #1 things that we all need to be learning, but this button gives you the potential to be using Fibonacci without having to memorize 1.618 and then 1 and 50 and drawing those out, right? So I'm just going to show you right here. It's this F, draw Fibonacci retracement. So you click on that, and if the market, let's say for example, is on an uptrend, you're going to go from the lowest to the highest. If it's on a downtrend, you're going to go from the highest to the lowest, right? So I'm just going to do it right here. So you're going to click on the lowest low up to the highest high, which is right here. You know, so you can kind of start to see, you know, 61.8, 50, 38.2, 23.6. If you have done Christopher Terry's beginning videos, then you'll understand what those retracement levels are, and that's really, or not retracement, Fibonacci levels, because generally they fight in the Fibonacci retracement levels. Of course, it's not 100% right. Nothing in the Forex market is ever going to be 100% right. Actually, as a matter of fact, nothing in life is ever 100% right. So you have to understand that these are tools that you should always be utilizing when you're drawing up your charts. I also hear this a lot. When people get on to these charts, they don't chart up the things that they are, looking at. So picture it like this. If I haven't done any of this and I'm brand new to IML and I just signed up with somebody, and blah, 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 and I'm all excited, this is what I'm looking at right here. This is what your teammates and everybody that you get into the company is going to be looking at right here. What do you see? There's a problem with that. If people, I only know Justin from Wealth Club is the only person that I know that likes to trade on naked charts. But the thing is that he understands what he's looking at. He's got trained eyes to see. But for everybody that's new, this is what you see, and this isn't helpful for a lot of people. You have to understand. So you have to go through the training process with everyone that you get onto this, right? So once again, I get rid of my grid, right? When you're doing this with people, you have to understand that this is where they're going to be making their money from. This is the most important thing that we have is MetaTrader 4 or Trader's Way. A lot of people use TradingView, the website. I won't really go over that because I'm not too familiar with it, but like Wall Street Academy and stuff, that is all done on that website. This is what we have. This is what Christopher Terry and everybody uses. This is where, this is what I use. This is what a lot of my roommates use, except for like 2, because they use TradingView, and it's that website. And here, I'll just show you the website really fast so I can not just talk about it. Hold on. This is it. Okay, a lot of people like to use this website. I'm not going to really discuss over this website, but I know when you're going to get your teammates onto the Wall Street Academy, and they're going to be like, what is this? This looks nothing like what I'm used to looking at. So make sure that people understand that this is just another trading platform that we can use. It's not a trading platform where you can call out trades from. It's just where you're going to be looking at charts. So that's really all that TradingView is used for. I'm not going to go over that. I'm going to stick like to right where we are, right? So you have to understand that when people are starting out and this is what they're trying to trade with, they're not going to make any money. They need to be going over the charts and drawing up support and resistance and drawing up Fibonacci retracements and everything that we should be using, right? And that's kind of like what this is. This is what we got going on. I know it's crazy looking, but this is what everybody should be learning. If you want to make money in the foreign exchange market, you have to learn to utilize all the tools that we have. So whenever you grab new people, not even just changing the color on the graphs and putting on all of the Fibonacci retracements and support and resistance lines, but understanding like what that stuff means. And you should be doing this before you trade, because it's like walking into a basketball game and nobody on your team, everybody's like, it's like a pickup team, 5-on-5, just you, let's go. That's kind of like what a naked chart is. Instead of doing that, let's become a team. And what that means in terms of Forex is that you should be understanding what chart you're looking at. Is it in a natural downtrend? Is it natural uptrend? Where is the support and resistance from 2 months ago? Supply and demand zones, the same thing from a couple of months ago, because all of that transitions into the newest point of the market. So these lines that you draw, they literally go forever. Look at that. So you can retrace all the way back. Even the lines that you draw way up here, you can go further back, and it's like, oh wow, I can see everything that's going on, right? So that's what that's for, So use that, utilize that. I'm not going to stick too much on Fibonacci retracement. Now we're going to move on to draw text, and that's really obviously draw text. That's right here. So that's all it's for. It's not really helpful for anybody that's trying to trade. So text isn't really helpful unless you're doing something like that. What we're doing is showing somebody online or whatever. Christopher Terry utilizes it a lot. Christopher Terry, beast mode. That's all that text is for. That's what the A is. Text label, same thing. It's just stupid stuff. So you don't really need to utilize any of these arrows. Kind of the same thing. Arrow down. It's just like little things that you can put onto your chart. Thumbs up, all that kind of stuff, delete all of that. So none of that is really, really helpful for when you're learning. So we can just move on past that. So the next thing that we're going to be looking at is the time scales. Obviously, when you're looking at your charts, you need to be looking at all sorts of time scales. So obviously MN is month, W1 is weekly, D1 is day, hour 4, hour 1, 30, minute 30, minute 15, minute 5, and minute 1, right? So that's what all that's for. You should always be looking at different time scales to utilize to make sure that people are trading on stuff that they have different multiple confirmations on. If you're only looking at the 30-minute chart, you're going to be blind to what the actual hour is doing. So the 30-minute might tell you that it's a buy, but really it's all a sell, and you're only looking at it in a very small time frame and not looking at the bigger picture, and vice versa. So when you want to be looking at 1 to 5 minutes is when you want to be looking to snipe your entry, because entry points are extremely important when you get into a trade and when you get out of a trade. So minute 1 and minute 5, sometimes minute 15 is going to be the thing that you're going to be using to get into the market. But when you're looking at monthly and weekly and stuff, and now you don't really ever have to look at monthly and weekly that much, because you should always be looking at one particular pair. So I look at USD CAD and GBP JPY. Those are my currency pairs, but I know generally what they're doing, so I don't have to necessarily look at monthly and weekly so much. All I need to be doing is looking at the day and the hour 4 and just kind of like where it's going. And so when I draw up my support, and by the way, this is where you're going to want to be drawing support and resistant lines, is on 4 hour and 1 hour. When you're drawing them there, then you'll see when you zoom in, like on 15 minutes and stuff, like you'll see them a lot better, and when you zoom in and things like that. So you want to always be looking for 4 hours and 1 hour to identify support and resistance and supply and demand zones. And then on 1 minute and 5 minutes, you're going to be wanting to use those to get into the market. So remember that. Always remember that. You do not want to enter into the market on a 4 hour or 1 hour time on a chart, because you're not really seeing what's happening in the market. And obviously, as we all should know, a little bit can mean a ton of money. Especially if you're getting on a currency pair, which is a high spread. View tools, etc. Show them how to display. I'm sorry, I wasn't reading. Awesome value, smashing it. Wall Street Academy has taught me so much. I'm almost ready to get back into trading. Heck yeah, man. Corlin, beast mode. Show them how to display to show the menu bar. What do you mean the menu bar? Let me see if I know what you're saying. Huh? What?
You probably mean this stuff. If you watch these. That's how you move these.
Oh, okay. So you said enter in on minute 1 and 5 minutes. That's kind of like when you want to be looking at it. I mean, the only thing that I'm saying on minute 1 and minute 5 is that you want to enter in at the market at the right time. When you're looking at, right here, we're looking at Euro to JPY, right? If you wanted to see, as we can see right now, that the market kind of looks like it might fall down without me doing any type of, charting out or anything. I'm just using this as an example. You're just like, oh, okay, so this is going to fall down, right? And I'm looking at an hour 1. If you were to go into a minute, this is what it looks like on the minute. So, you get a much bigger, deeper picture of like, oh, look at this downtrend. You wouldn't want to buy up at the top of it when it's already starting to crash, so you can go in on a correct buy or a correct sell. I'm sorry, I said that backwards. You have to forgive me, guys, I have hiccups. The 1 hour and 4 hour determines the overall trend. It does determine the overall trend, but you have to understand that you should not be jumping from pair to pair. If you have a teammate, you should always have 4 eyes looking at one currency pair at all times, because if you're jumping around to USD CAD, to NZD, USD, and all these over here, it is way too much information for beginners to understand. I don't even know if Christopher Terry can do it. And if he can do it, wow. That's all I've got to say, because it's so much information to understand. You don't want to get into this market without knowing what you have going on, right? So you have to understand that the market makers take the money out of the uneducated people's pockets and put it into the educated people's pockets. And the educated people are the ones that sit here for an hour and or however long it takes, and to identify the zones that they're going to be going in on entries and stuff. So the 1 minute and 5 minute is only just strictly for entries. That you want to get into the market at the right time. That's all that you should ever be utilizing it, unless you're binary trading. But I'm not discussing binary trading. I'm strictly talking about normal trading that we should all be learning to do, because binary trading is very quick and fast-paced trading, and we're not discussing that tonight. So 1 minute and 5 minutes for entries, 30 minutes and 15 minutes to kind of get what's going on, and to understand that you're going to be going in on the trade soon, and 1 hour to 4 hour to identify support and resistance, because obviously you can see so much more of the graph. So that's why it's extremely important. So that's what these are for. I'm not going to spend any more time on the time scales. Next thing that we're going to be doing up there, come here, mouse. Alright, so create a new chart. It's obviously, and I'm sorry, I'm moving on to the next round of buttons. These are the top ones. Obviously this first top left button is new chart, EURUSD, brings up a naked chart. Oh, and by the way, charts are always down here. You see, like, this is our chart, this is the one I've been discussing, this is just something I just pulled up, and so is this one. So all of the charts that you can bring up are right here, and you can minimize them right here. Don't minimize the entire program, because that's what happens, obviously, but you can minimize each chart, and it's right here, obviously. And for Mac users, it's over on the left, because Mac likes to be difficult. So moving on, let me go ahead and blow that back up. Okay, so now we know what that is. Profiles is, just it's just another way to categorize the charts. See, it brings up a bunch of crazy stuff, but we're not gonna. You don't really ever need this button. You don't need to worry about it. Oh wow. Oh, I see. No. Previous profile. There we go. Okay, so you can bring up see, it's like you bring up all of these charts right here, right? And then you can open up another profile, which you can be looking at a completely different type of, chart. But like I said, everyone is a beginner. Everyone that is in here is learning. So it's you need to understand that do not try to learn 1st through 12th grade all at the same time. Learn 1st, then 2nd, then 3rd, then 4th, right? So you should only be studying 1 to 2 currency pairs tops. And there's plenty of information. You can ask, like, the best traders, like, what is their favorite currency pairs and, like, where they make most of their money. G to J is one of them, guys. I'm telling you, that's a nugget right there. G to J and USD CAD are money makers, but not all the time, of course, but that's really where a lot of people like to make their money. So we're going to move on. Obviously, these buttons right here are, Market Watch. If you close it, see, it goes away. And if I close out the navigator, that goes away, right? Or you can click navigator and it comes back, or you can click Market Watch and it comes back, and you can click and drag these to make one bigger than the other, as you can see. So whichever is most important to you. Obviously, in the navigator, you don't really need it as much. You only need to apply the things that you want, and then it can really just, like, go away. You can close it out. It's not really that helpful at that point. Data window isn't obviously, incredibly helpful. I mean, it kind of is, but it's kind of just like redundant information, date, time, open, when it opened, it's high, it's low, blah, blah, blah. And it's constantly, changing all the time. So data window isn't extremely helpful. It's just more information, but like I said, keep it simple, because trading is simple. You can make money using very rudimentary things in the beginning. So that's what that is. That's navigator. Terminal is just down here. Terminal is the bottom of the screen. I know that my webcam is blocking it. What pairs did I say? USD CAD and Great Britain pound to the Japanese yen. And then, somebody right here says the Legia 8570, the pound / yen and Aussie / loonie are ideal to study first. There really is no right or wrong answer to that, It's whatever you feel and whatever what the times that you can get onto the charts and looks, because there's different stock exchange opens, and the Forex market is open 24 hours a day. So different currencies will be more volatile based on what time that you can actually get onto the charts. So there really is no right or wrong answer. We live in Texas, so right when we're ready to start trading, which is around, like 11 to 12, we kind of start to gear up to what we want to do tonight, and we already know You know, we're looking at, oh, okay, this is going to be doing this tonight, or this is going to be doing that tonight, you know, just whatever, you know. So those are the currency pairs that we choose, and that's Central Time. Can use the I believe that's a indicator. You said which markets are good to use again. Somebody said it down there. USD CAD, GBP, JPY. Let's see. G to what? Sorry. Will this be recorded, Eric? I'm sorry, bro. Yes, it will. Yes, it will. By the way, guys, every video that happens on the Twitch page is there. If you can see on the top left of the Twitch page, under where it says support resistance with Darn, or it might say something different now, but it says the DFW Trade House. You can click on that and check out our past broadcasts. So even if your team couldn't make it to this particular live webinar tonight, it's still going to be available, so people can still watch what we have going on and make sure that everybody gets the information, because that's kind of like what we discussed in a phone call with everyone, that we need to oversaturate GV and IML with this just an abundance of information, and it's constantly, I'm sorry for hitting the mic, it's constantly going to be happening. We're going to have a weekly schedule where people are going to be getting on here discussing all different types of things. Sunday's the basics. That's what we go over. That's what the DFW Trade House team is going to be discussing on our days. Then tomorrow will be something different, and the next day will be something different. But next Sunday will be basics again. You understand? So we're going to develop this to where people can always know that Sunday, when you have new people, that they have to make it to these webinars or check out the webinars that have already been done. So make sure that you plug into the information and use the stuff. Don't try to explain everything to people one by one. Use the things that we already have available. And I find myself making that mistake a lot, that I'm not plugging in my new teammates into the information that is already available. I'm trying to do everything myself, and you're going to overwhelm yourself to that point to where if you sign up, think about it. If you signed up 3 people in one day, do you understand how many hours that would take to do it one by one, showing them that we're talking about MetaTrader. We're talking literally about the trading platform. That's all that I've been discussing. I'm not talking anything about trading. I'm talking strictly on how to navigate through the trading platform. Understand that this is a lot of information to consume. Watch this video, watch this webinar over and over and over until you understand what you have going on, because it's a lot of information. You'll have to understand that this is going to pay you like a hobby if you treat it like a hobby. You need to make sure that you're treating this like $1 million business, like $1 million computer program, because it is. Everybody knows how to operate Google Chrome, right? Everybody knows how to delete. If you're a guy, you know how to delete internet history and delete cookies and set web pages and stuff. Well, a lot of people don't understand how to do that. Well, you need to translate that kind of knowledge and that kind of desire to understand how to use that program into MetaTrader or TradingView, but I use MetaTrader. That you need to know how to use this program like the back of your hand. Every single button, you need to know what they all do, and that's just the buttons, guys. I'm telling you, you're learning how to use the controller, not to play the game. There's so much more to discuss besides what I'm going over. Always good to review things no matter how long someone's been trading. That's very true. Y'all are awesome. I was scared to trade today because I was going to start, and now watching y'all I feel more confident. Sunday is not a good day to trade. First of all, you can do whatever you want, but Sunday is the market open. It necessarily can do whatever it wants. People, you can certainly trade on any day that you want, and nobody's me or anybody here is never going to tell you what days or what to do with your money. I only suggest it because it's the market open. And even on Friday when the market closes, you should never be trading after noon on Friday because you don't know what's about to happen, right? So Sunday is not really the best day to trade. Show me what you mean by every guy knows how to delete their history. No, you know what I'm talking about, Josh. I was just using that as a funny example. Are you going to go over how to get into a trade? Yes, I am. Here, I'll show you right now. Well, let me get to it. All right, so strategy tester, it's not really, once again, it's just more information that is it's an overload right now. We won't go into that right there. New order, this is where you call out a trade. So if you want to, let's say, go in on a buy or a sell, new order right here. This is what happens. This is what brings up every single time that you go in on a trade. So volume is your risk. If you only have like $100 in your trading account, obviously you're not going to be on 1.00s. That is way too much. You will blow your account. Do not do that. You should be trading on like literally at most 0.1, if that. That is if you believe 110% and you can explain to every single person why you're getting into that trade, why you should be doing 0.1s. Now this is of course on account size. If you have more than $100, then you can do what you want. It's your account, it's your money. So you should be trading on 0.05s, 0.1s, trading pennies and making those into dollars. That's what volume is. Stop loss is obviously covering your equity. If you have $100 in your trading account and you go in on a trade, and let's say that you're trading pennies, you do not want to have not have a stop loss. So you want to have a stop loss in place to cover your equity, because even though that you might be trading pennies, if you don't have a stop loss in place and the market goes the wrong way, you can theoretically lose all 100 of your dollars because you're not protecting your equity. Whatever is in your broker's account, you have to understand, is pretty much not your money anymore. If you go in on a trade, you can theoretically lose all of that money. So you have to understand that you need stop losses, or you need to be babysitting your trades. But you do not stare at your trades. You babysit them, but even when you're babysitting a baby, you do not stare at the baby for every single hour. You put it in the playpen or whatever and go and do something else. So you have to understand that you do not stare at trades either. That's something that I've discussed before about emotionally trading. I won't go too deep into that right now, but stop loss is just covering your equity. So if you think that the market is going to go up, stop loss would be under where you bought. So stop loss, literally, if the market goes to the wrong direction, that it'll cover it and it'll close that trade out, and you will protect the rest of your money. Same thing for a sell. If you think that the market is going to go down, but the market goes up, and and if it were to blow past the stop loss, it's not gonna blow past that stop loss, assuming that it's there. If it's not there, then the market will just keep going up, and your trades will get more and more negative, and then you're gonna have to hope that the market goes into the direction that you want it to, or you're gonna have to close out on that trade. So that's what stop losses are for. Take profit is the exact opposite of stop loss. Take profits is if you think that the market is going to go up, you can set a take profit line above where the market is, because you think that it's going to go to this point. So if it gets to whatever number that you set, it's going to take your profit, close a trade out, and there you go. You've taken your profit from the market. NT4 blew past my stop loss in TP for some reason. Maybe it wasn't inputted correctly. I'm not sure. Okay, so wait, Sunday's not a good day to trade. Is that like before the London session, no trading, or after midnight would be a good time in a comfort level to go ahead and trade? I would definitely give the market as much time as you can physically to kind of develop itself. When the market opens, you can even do this on history. You can go back, because obviously you can see down here the dates. You can see this is January 8th, December 31st, blah, blah, blah. You can go back literally to every market open and every market close and see what happens. If you look at, Euro to JPY, for example, this is what I'm looking at. You can literally go back in time and look at what the market has done, and that's what you should be doing, because you can also detect trends that way, that every Sunday the Euro to the Yen does this, right? You know what I'm saying? So always be aware of the currency pair that you're looking at and make it yours. This is where you're going to make money from, guys. Understand, this is where you will make money. And everyone that has not made money from trading yet, you have to understand that if you're not plugging into this stuff, then you're not going to make any money. So make sure that you are like literally owning this currency pair that you're watching, right? So we're going to move on. Take profit and stop loss. Comment isn't really helpful. Market execution is honestly like when it'll literally execute a market order right there. Buy or sell and immediately go right in. I'm gonna go ahead and close that out and open it up again. So so that's what that does. So we're gonna move past this button. That's how you call out a trade. I've tried to trade on an went past on my iPhone. The candlestick wasn't past the stop loss. Okay, so even though that even if the market will go past it, it has to close above it. You know what I'm saying? So to the next stick is when it will have to, when it has to, you know, if on a minute you have, like, let's say a take profit, if it goes above that take profit and comes right back down, then it won't count unless it closes above it. Then it will take that take profit, or it'll take the stop loss. Do you understand what I'm saying? So the market will go past it in the shadows, just like this. You know, like the, if anybody, I haven't discussed that yet, I'm sorry, but I can't assume that y'all know what I'm talking about. I have to assume that we have brand new people in here. When you're looking at a candlestick, you can see the thick part of the candlestick, right? And then you can see the little lines under and above every single candlestick, right? Or not every single one, but the majority of them. And that's because right now we're looking at a 4-hour chart, right? So every single stick on this chart represents 4 hours each. Obviously, these are the day. You move to 30 minutes, every single one of these is 30 minutes, right? So when you're looking at, let's say, one individual stick, let me zoom way in. So right here, on this 30-minute chart, on this 30-minute candlestick, this is where price went all the way up to here, and price went all the way down here. But the thick part of the candlestick is where most of the buying and the selling happened within that 30 minutes, right? So you look at another candlestick, there was so much buying and selling activity on this part. You see like how thick that candlestick is. So there was a ton of buying and selling. There was a ton of activity in this particular candlestick. This one right here, as you can see, there was barely any. Most of the buying and selling happened right here, dead, you know, like dead even pretty much. And then price did break out a little bit on top, and it broke way down, but just for a little bit within that 30 minutes. And then it moved on to the next stick, and then obviously there was a ton of buying and selling in this one. So that's what shadows are on candlesticks. If you ever hear that term, you're looking for the long shadows or little shadows, and you know, blah blah blah. There's every single candlestick has a definition for what it looks like, and you should always be utilizing that to see where the market's going to go on the next round of candlesticks. So how do you set trailing stops? Example, 25 points. Is that the same as 25 pips? Okay, hold on. Okay. Yeah, I went past on my iPhone. I answered that. I've tried to trade on FXCM demo, and it wouldn't let me take a trade. It said to set my operational parameters. I'm not sure what that means. Operational parameters. New order. See, I can't place an order because I'm under a different account right now, so I can't. This trade will be market exited or executed at market conditions. Difference with requested price may be significant. Blah blah blah. Let me see. So it's not letting me call out a trade, and it's because I'm not logged into an actual account right now. Even though it says Traders Way Live up here at the top, and it has an account number, it's not necessarily logged in. So I would have to relog. So let me here, open an account. Oh, here, let me go over this too. This is important. Okay, so guys, when y'all first get your brand new team, I'll get to your question in just a second, Antoine. This is very, very important for beginners. If you had just signed up, right, and you just made your Traders Way account for your live and for your demo account, and everybody should be using Traders Way Live on their demo account to actually have like a realistic amount of demo money to use, because you should be using demo accounts as if they're live accounts. Because if you're just like going crazy on demo accounts, you're not really practicing, you're not using and utilizing demo accounts for what they should be. You're just, you know, doing crazy stuff for no reason, because you know that you can't even do that realistically with real money, nor would you, or you shouldn't at least, right? So when you go to file and you go to new chart, we know what new chart is. Open offline, you don't really need to do that. Open deleted, these are all the charts that we've opened up, blah blah blah. Profiles, the same thing. Remember, I was we know what profiles are. Close, save, and save. You can save pictures, you can save a picture of the graph. Open data folder, this is where you input the scanner, any new type of indicator or expert advisor that you get. If y'all say which one, if y'all want me to go through open data folder, I can. Open an account is really where I wanted to get to. When you open a brand new account, it's going to bring this up. It's actually never going to say Traders Way demo or Traders Way /live, but that's how you can plug them in. You do it right here. You click on this little green arrow, and for example, if you wanted to bring up all of Forex, you literally type in Forex, Forex, and enter, and you see it's searching. Oh, look, here they all are, FXCM and Forex, and like all of the different type of currency pairs that you can be using, right? So I'm just going to use a demo account. I'm just gonna use FXCM USD demo 1, and how you do that is, like I said, you click on that green arrow and type it in Forex. Then you go to next, new demo account, next, all this, great, and then you just click I agree and subscribe to your newsletters. The demo deposit is crazy. Next, cool. So it's gonna open an account. Bam, awesome, finish. So now you can see when you do that, when you open up a new account, or when you log into another account, everything that you were doing on the account previous to that is gone. Or it's not that it's necessarily gone, it's still here, but all of your trades and everything down here is different. So now you can see $50,000 in demo money, blah blah blah, right? So let me see if I can go in on a trade now. No, enable maximum. I'm very confused why it won't like go in on a trade. Oh, that's I'm so stupid. I didn't have any risk. That was my problem. I did not. It was 0.00, so it's obviously not going to let you trade anything because you're not risking anything. So that's how you do that. So how to call out a physical trade? You take a lot size and then you click sell or off quotes. Please verify. Oh, so this is what you were talking about. So okay, successful. So you just what that means is that you had that thing opened up, you had new order opened up, and then the price changed. So you have to make sure that either it'll prompt you to get to the new price, whatever the new price may be, and then you click OK, and then it should go in. Come on, Mike. Come on, what? Hold on, let me answer questions. Can you explain pin? God, I'm so sorry. There's so many. So stick to one pair and its correlated pair. Risk, yes sir, absolutely. Because if you get to the one, if you pick one pair and do its correlated pair, you have to understand if one goes up, then the other goes down. It would also depend on the time frame during the trade. Can you explain pending orders, sell, stop limit, buy stop, and buy limit? I will in just a second. How do you set trailing stops? Okay, so trailing stops, all that stuff is right here in pending orders. And what a pending order is that the market is not where you want it to be at that particular time. So if you are thinking that the market is going to go way down, you can set a buy limit. So you go to pending order, type buy limit, buy stop, so a buy limit, and then you would do it at the at price. So for example, on here, the current price is 1.11601, and you think that the market is going to dip down, then go up, then you can set your price to, like, let's say right here, 1.11240. So you would type that, 1.11240, then you would place, and you can even set when you want it to expire, so you can walk away from it. So then you can place and see the buy limit for the Euro USD is successful. You push OK, and see, even though it's right here on the bottom, it's a buy limit. 0.05 is on my lot size, Euro USD. The price and my stop loss and my take profit is not set. It's all I've done is set a buy limit. So that means that when the market gets down to this point and it goes under it, even for a second, it's going to buy in, and it's going to be a buy limit. So that means that if it surpasses the buy limit, then it's going to go in on the trade. Same thing for sell limit. If it's going to go up and it gets to that point, and you want it to be a sell, and the market isn't to that exact price that you want it to be at, to where it's going to turn around, you set the sell limit, it hits that point and surpasses it, then it goes in on the trade. And obviously if it keeps going up, it keeps going up, and if it goes down, then you're in money, right? So that's all that those are used for. Okay, so green are buys and red are sells. I think you might be talking about over here, and that's just really the price, like what it's doing, if it's up on a high or a low. Can you explain pending orders? Just did. Oh, damn. How do you set trailing stops? Trailing stops are really, I mean, they're good. Hold on. So you make trend lines from the wick or the body? From the wick. And they're, yeah, see, and I'm sorry, they're called shadows and wicks. Wicks are what he was talking about is right here. You know, the skinny part of every candlestick, they're called wicks. So when you're identifying support and resistance, you want to do it off the wicks, not the actual candlestick body, because that's where price touched down there. So you have to understand that you have to use it on where the price went, not just the full part. So, or not the full candlestick. So many advertisements. That's weird. Got it. Do you recommend using trailing stops? Yes and no. I mean, you are a trailing stop. If you're babysitting your trade, you are the trailing stop. If you're watching it, if you are not going to watch it, if you're going to sleep on the trade, which you have to understand is, you have to be ready to do that when you do that. But if you're not, then you can set the trailing stop, because it'll obviously protect your equity and protect your profits. Okay, so and Fibonacci is drawn based off the trend, right? If the trend is down, I start from the top to bottom. So if the trend is going down, you start from the top and go to the bottom, and vice versa. If the trend is going up, you start from the bottom and go to the top, on the lowest low to the highest high, and from the highest high to the lowest low. So Fibonacci is, you have to be smart when you put those in. Okay, so do you recommend, come on, my risk management class next week? How do you bring up the trader's account on demo? It seemed like it won't come up for me when I try to find the broker. So, okay, what I was explaining earlier, and good question. So when you go to open an account, and if all of this stuff isn't there, I showed you that all you have to do is type in click in that green circle and then type in Forex, right? If you want to bring up your Trader's Way demo account, and it's right here, but I'm going to see if I can do it anyways, and it has to be spelt verbatim. Capital T, R-A-D-E-R-S, oops, I put an F, traders, and then capital W-A-Y, no space, and then you dash. And then when you do the dash, then you do capital D-E-M-O. And then when you do that, then you click search. I don't know what will happen since it's already here, but you'll know that it'll work if you see under the company it says TW Corp, because that means that it brought up Trader's Way. Risk management class. Okay, so how do you bring up your Trader's Way account on demo? Just explain that. Where do you set leverage? Leverage is what you should be doing on your and that's on the website. That's on Trader's Way, where you set your leverage. Limit versus stops. You set your leverage in your broker's back office. So somebody answered that. On the candlesticks, greens and reds. Green, obviously green means that we're price entered onto the next candlestick. Let me explain here. Let me show you. Okay, so if it's an uptrend, right? It starts, from the body of the next candlestick whenever we're looking at 30 minutes, right? So at the start of the next 30 minutes, it moved right here, and this is where price opened on this 30-minute candlestick. Then it fought, blah, 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 right? And so price eventually made it all the way up here at the end of this 30 minutes, and at the start of the next 30 minutes, it opened up right here. This is easily best explained with these kind of candlesticks, that you can see that price opened right here on this candlestick, where you can see this little stick to the left, then price fought, and then it closed up all the way up here. The same thing on this candlestick. It opened right here on the bottom and fought and all the way, and then at the end of that 30 minutes, price closed right here in the middle of that candlestick. All right, so now then the next stick to show that it's a red downtrend is that price opened up above where it closed. So when you know that it's a downtrend, it's a downward candlestick, is when price opens and then price closes. And if it's an uptrend, price opens and price closes. So that means that it's going up or it's going down on the open and entry price of every single candlestick. So that's what those mean. So now you can kind of see on every single candlestick, it's like, look, price closed, price open, price closed, price open, price closed, price open, and so on and so on. So you can always see that the candlesticks literally move left to right. Okay, on this candlesticks, can we set time to our local time? Yeah, it should automatically do that. Wick is where price had touched body. Yeah, so cool. On $1,000 account, what should be my leverage to make decent money? 1 to 1,000 is the highest that Trader's Way offers, so it's totally up to you. Retracement versus reversal. Retracement is, retracement is obviously, so if the market is going in an uptrend, retracement would be It goes up and it retraces a little bit, and then it keeps going up, and then it retraces a little bit, and then it keeps going up, and then a reversal is just when the market is going up and then it starts going down. So retracement is kind of just like a correction of the graph that they all naturally do, that if it's naturally going down, it'll retrace back up just for however much, and then it'll keep going down, then it'll retrace back up, and then it'll keep going down. And then an actual reversal is if the market is going down, even with retracements in it, it is still a natural downtrend, and then it starts its uptrend. So that is a retracement and a reversal. So what is the ideal leverage? Anyways, does it help or is it needed? 1 to 1,000 is the best. Can you go over buy and sell limits versus buy and sell stops? Will, do you make support and resistance lines on the line chart or candlestick? Is there an advantage or disadvantage? I don't really like line chart or bar charts. You're talking about bar charts, these right here, I believe, is your question. Candlesticks is just honestly the best. I learned that from baby pips, and that's what I've always seen. So candlesticks just kind of, I guess, give you better, it gives you a better picture versus when you look at this, you don't really know where the buyers and the sellers fought the most, and that's a problem. So that's why candlesticks give you more information. So, always use candlesticks as a good rule of thumb. Of course, if you learn to read bar charts, then more power to you. But I promise you'll be flicking back over to candlesticks to see. Can you go? Do you make support and resistance lines on candlesticks, John? Excellent. Can you draw a fib for us on a downtrend and an uptrend so we can get a perspective? Sure. Okay, so I already have a fib drawn. Here, I'll just delete this chart. I'm gonna start over. Well, that's somebody's chart, so I'm not going to delete that. I get rid of my grid. These little lines right here. Oh, I guess I should just go over this really quick. When you go in on an order, your lines will actually show up. See, I went on a sell, and here's my buy limit. So I set a buy limit here that if it's going to go, if the price of the market actually, you see, touches down here, then it's going to go in. But see, this is currently a sell that I have in on the market right now. It was an example. This is just demo. I'm just showing for the sake of example for people that even when you're here, you can even click and drag your orders. So you can go down, see, like that. So you can modify your orders simply by clicking and dragging what you want to do. So that's pretty cool. Especially like if you're in profit, let's just say, for example, that the market, see, this is a sell, right? So if the market were to start tumbling down, I could literally drag this line. I could literally drag that down there and keep, locking in profits. So the distance between, where I went in on the actual sell versus to where I actually dropped the line, I will lock in that profit. Does that? I hope that makes sense, because you can do that and that's a beautiful thing that you can see. I went in on a 0.05. If I drop this down, I can lock in some of my profits, and it'll change to a point like 0.02 or 0.01. You know what I'm saying? So you can still stay in on a trade, but you can do more with the trade by locking in your profits. So that's what that is. Excellent. Can you? Oh yeah, draw a fib. Okay. All right. So a fib is right here. Remember where I was showing draw a fib line retracement. So you go from right here. This is an uptrend. This was an uptrend right here. So lowest low to the highest high, which is here. Okay. So that is when you do it on an uptrend. You do it from the length of the candle wick to the top of the highest candle wick. So that was on a buy and a sell. Let me find one. All right, so we'll just use this. On the next fib retracement, we go from the highest high down to wherever we want to keep going. So we'll just do this lowest low. So highest high to lowest low. Do you guys only educate on this link, or do you also call out trades? We don't call out trades because if you want it, just picture it this way: if we were to call out a trade and we didn't make money from it, or if you didn't make money, as a matter of fact, you lost money, who would you be more mad at? Listening to someone and not trusting yourself on your own trades, or would you be mad at yourself for actually listening to somebody else? Because I might not be right, I'm not perfect. I have no idea what the market is going to do. It is the world currency market, guys. Understand that nobody knows. It is Fugazi. If you've seen, Wolf of Wall Street, it literally is. It can do whatever the market wants to do. So understand that nobody should ever be calling out trades, but more or less you should not be listening to people that are calling out trades. I mean, you can. It's not really, it's not terrible, but the whole purpose is to learn this life skill, guys. So always just be, on top of your trades and your information. So what did you just explain about locking in profits? Okay, so let's just say you go in on a sell, right? And let's just say, for the sake of example, you go in on a 0.05 and the market does what you want and the market starts tumbling down and you're in profits for and you go into profits and let's just say you're up like $30, whatever, right? Okay, so on that 0.05, instead of keeping in the 0.05 trade, you can go into the order and modify it to change it from a 0.05 to, let's say, a 0.02. So then that 0.03, you lock in those profits. Like literally, the trade is halfway closed. If that makes any sense, that you can literally lock in some of your profits but still keep the trade in, because on the normal way of doing it, if you closed out the trade on that $30 profit that you made, if you close the trade out, you took $30 and you're out of the market at that point. But on what I was talking about was taking half of your profits, is that you take $15 of that 30 that you made and you stay in still on that trade, but you locked in $15. Does that make sense? So understand that y'all can do that with y'all's profits, especially when you have multiple trades open. You can do that and still stay into the market. If you think that the market is still going to go down but you want to lock in some, then that's what you do that for. So by moving the sell line, so by moving, you can move it on here, and if you're doing it on your phone, I don't know if you're going to be able to see this, but I'll show you on the phone, because a lot of people like to trade on their phone. This iPhone is on 3%, so I got to do it fast. MetaTrader 4. Okay, so let's just say you went in on some trades. Let me log into a demo account, because I'm not gonna, I'm just, dang it. Oh, here's my phone. Okay. Alright, hold on 1 second, guys. I have 3 missed calls. MetaTrader 4, and then let me just, sorry guys, demo account. Yeah. Okay. So now, when you go in on a trade, right? I don't know if you're going to be able to see this. Like I said, it says 0.02, right? Or 0.05 or 0.9 or 0.6. It's under instant execution on the app. When you do that, let's just say you went in on a buy. So you click buy, right? And so, it's successful, right? And it's growing. And let's just say it goes into profit, right? And you went in on that 0.05. You can hold it down and then go to modify. So when you go to modify, then you can pull up, it's not there because it's not in profit yet, but you can change that 0.05. You can literally turn it down and then lock in half of those profits, or however many profits that you want to do. I personally like to call out trades on my phone. That's personally what I like to do. A lot of people do like to do it on their computer, because they can literally click and drag those lines. It's the same thing as changing the numbers on the phone. I was just showing you for example, but clicking, dragging the lines is the same thing on the computer. A lot of people like doing that because it's literally as simple as clicking and dragging, versus the phone where you have to go into the actual trade and modify it, and all that takes time. So a lot of this will come down to timing and when you get in and out of the market, right? So it's really just personal preference. That's what that's for. So by moving the sell line, bid and ask. Bid is the buy and asking is the selling price. Yes, it does, just by just moving the line. Yes, great, Mike, you're the best. Thank you. What app is that? I'm sorry, I didn't hear it. This is MetaTrader 4. The app that we're looking at right now. I'm sorry. MetaTrader 4 is an app on your phone. You can trade from your phone. You know, you can be looking at charts on your phone. You can look at your trades on your phone. You can look at your history. You can change the color. You can do everything. You can do everything that you want. You can look at the quotes. You can do everything that, well, not every single thing, because obviously the computer program has a lot more information and a lot more things that you can do, but you can master the phone. You can master the phone app as well, and you can call out trades while you can just utilize everything that we have going on, right? So I like to personally call out trades and close and cancel out trades from my phone, and then look at the charts on my computer. That's what I do personally. So okay, so just for example, I'm in profit right now, right? I'm at $2 profit on this particular trade. So what you would do is you go to modify. Okay, you hold it down, go to modify. Oh, hold on. Modify, and then okay. I don't know why it's not letting me stop. Oh, okay. Okay, so it says stop loss or take profit must be different by the price that you bought at least 8 pips. So I can't do it yet until it's at least 8 pips in difference in price. So the $2 is not enough yet. So Mike, what app is that? Is it the MT4 app? Yes. Does anyone use MetaTrader 5? I don't. I've never really I know about it, but I just use what everyone has been teaching me on MetaTrader 4. So I don't really ever use MetaTrader 5. You're more than welcome to. Does the phone link up to the trader on the computer? Yes, because it's not the MetaTrader app. Anybody can download the MetaTrader app, and that's kind of like a tool you can use when you're showing new people, like people that aren't even in IML yet. You can just be like, hey, download MetaTrader 4 on your phone. I know you're not going to know anything that's going on, but you can just literally just create a demo account and just click buy and sell. And I hope that y'all aren't doing that. If you're just clicking buy or sell, then you might as well be brand new. You know what I'm saying? So my buy and sell lines won't move up and down. Not sure what I changed. Why won't they move up and down? Not sure exactly why. I'm not staring at your computer right now, but it's really, like this. You click it and see, just like that, and then it would be, this is where you change, this is where all the numbers change. You modify your order, right? Okay, so that's I'm not going to spend any more time on that unless I need to, but the buy and sell lines only change when it can. You can't like, I hope I'm not saying it to where like y'all can like fix your trade. If you thought that it was going to be a buy and it starts going down, that you can like change your entry. It's not going to work. It doesn't work that way. If it does, then nobody would ever lose money. So your trade has to be within the parameters of actually it being able to move. You know what I'm saying? So if you're negative on the trade, you're not going to be able to change and take half of your profits or close out half of your loss or anything like that. It doesn't work that way. So the trade obviously has to be, it said it on my phone, it has to be at least 8 pips in difference from the time that you bought to the time that you actually want to adjust it. So that's what that's for. They used to, like I said, not sure what I changed. Shaw, I'm not sure. You can PM me, and then I can help you try to figure that out. I'm not sure exactly like what's going on. I'm not sure what you changed either. I'm not, like I said, I'm not staring at your setup. I'm really sorry. I wish I could help, but I think so far I've gone over all of these buttons right here. I spent so much time on new order. So MetaQuartz language editor, you do not need that button. Auto trading, enabled auto trade, automated trading, you do not need that button. Do not ever click this button. It's you do not going to have anyone auto trading it for you on this. The next series of buttons is obviously where you can change it from line charts. I make it work. It's okay though. Alright, Shaw, good. Well, you can always hit me up. Somebody, I hope somebody will post my information, but we know what these buttons do. Changes it from lines to candlesticks to an actual just a line, and that's not what you want. Obviously, we should know what zoom in and zoom out does. Zoom in, zoom out, that one should be pretty obvious. And range windows is non-overlapping tiles. That really just is like when you have multiple charts opened up, you see what it does. It doesn't overlap each other. You can just see them all. So that's really what that's used for. That's an easy button. These are the buttons that I really wanted to explain. let's just say, for example, that you wanted to. Here, let me show you because it's annoying. So like, oh, cool, right? I'm looking at this chart or this chart, and I want to go back. I want to go back and look. Okay, so then you go back and see what it did. Here, I'll do it again. You see, I'm not touching anything. Watch, and then the chart is going to go back to the front. See that? You see it? It just did it. What that button is, what this right here, is to scroll to the chart at the end of the tick incoming. What that really means is that if you're trying to scroll back and draw support and resistance lines and looking at the history of the graph, if this button is enabled, every single time that there's a new candlestick drawn or a new tick or anything that happens, it'll automatically shoot you back to the front to update you what's going on, right? So if you want to go back into the history of the graph, you have to uncheck this button right here. If you uncheck it, look at that. So now I can go back and back and back and back and back, and it's never going to take me back to the front. You see? I can do this all day. I can draw support and resistance now all day, no problem. And if I click this button again, look at what happens. Bam, right back to the front. Okay? So if that button is activated, understand that it's always going to be fighting you to get back. And that took me forever to figure it out. But can you use the harmonics? How do you use, it's okay. How do you do a stop loss on the mobile app? It's this, okay, so I'll show you really fast. When you go in on a trade, okay, so hold on. So you're looking at your charts, right? When you're on your charts, you're doing everything, you're like, oh great, alright, I'm going to go in on a sell. You click trade, the top left button, well this is on iPhone, and then it brings you up to this page. I'm really sorry if y'all can't see this, but right here it explains all of the information that you can adjust. So one of those is stop loss, one of those is take profit, one of those is deviation. So that's where you can mess with all of the parameters, and this is before you actually go in on a buy or a sell on whatever trade that you want to go in on. You can adjust all of these parameters before you get in on that trade. So that's how you do it onto the phone, right? Same thing on the computer here. So when you do USD JPY, your stop loss is right here, or whenever you decide to go in on a trade, that's where stop loss is, right? So now we understand. Now you know how you can go back. So we're gonna move on. This button shift end of the chart from right border. So you see, like, this is the start. This is like where the market currently is, and I don't really have a lot of room to look past it. If I click this button to the right of that button, see, it opens up the right side. Let me do this on a naked chart so it's easier to see without all that Fibonacci all over the place. Okay. So on a naked chart, let me get rid of the grid. Okay, so you see I'm trying to click and move to the right, but I can't. If you click this button, shift into the chart from the right border, it's going to get off of the right border. So you click it, and look, now you have all of this empty space to look at.
Did you tell them what that button does?
Huh.
Why it does that?
Yeah, it's so people can see, and you.
The reason why it lets you scan it is because the button makes the price live. When you take it off, the price won't be live.
Oh, okay. So what he was saying is that the price won't be live when you click this button. So when you click it again, price will reactivate to the actual current price that it's at, and this just gives you a little bit more room so you can kind of utilize that to where you can kind of see like where the market might be going, or drawing stuff, or anything. It's whatever that's used for. Deviation as Google Fib retracement. Oh man, there's so much. How do you do stop loss? I've done it. Can you use a harmonic pattern scanner on the MT4 app on your phone? Not yet. That's something that is coming, but we'll see. We haven't been able to do that yet. Which button is that? This button is right here. It's right here on the top, right next to this plus in this piece of paper, the indicator list. It's right here. You can click that, and the market will, jump to the right and stuff. And then this button, obviously, so you can scroll. You click it again. See, like if you're like way back somewhere, and you're like, damn, I want to know what's going on. You click that button, it'll take you right back to the front. So that's what these two buttons do. Indicator list is just showing you, okay, so indicators is like a whole thing. Periods, you can just change it. This is just a button to where A lot of the stuff kind of repeats, but the button, you know, the time scale changes are right here, but you can also click the clock, and the clock will take you to 4 hour, 1 hour, 1 minute, 5 minute, whatever, right? So indicator list, periods, and templates. Templates are, you know, anything that some type of changes that other people have made. You can, you know, load template, save a template. If you make one, look at one, you see, like here, let's look at momentum. Template momentum will be removed. Oh wait, no, not removing, but so go to layers and see, and it just brings up like a bunch of stuff, like a template that is already, somebody's already made, or it's already on, you know, that has already been made. So that's really what these buttons do. Templates is something that you'll learn about. Indicators list, I'm not sure if I'm going to be going into that right now. Okay, how do you, okay, can you use, which button is that? So if you're drawing fibs from low to high, you think it's going to go up. It's not what you think it's going to go up. It's if it is. You know, you don't draw Fibonacci on lines that don't exist yet. You know, you draw it on lines and charts that have already happened. You know, you want to be drawing them, see, like that. You wouldn't know where to place it if you're trying to guess on where it's going. The Fibonacci retracement lines go all the way, you know, like as you can see as I'm doing here. I don't know why I keep like touching the screen, as if y'all can see that, I'm sorry, but using the mouse, you know, you want to be drawing it from the lowest low to the highest high. So explain the indicators that you are currently using on the first chart. I will do that in a second. Explain, okay, that's my sweatshirt. Man, Mike back at it again with the nuggets. Pimpin' ain't easy, right? Alright, so what this is I'll go over a little bit of the stuff that we're using. This is just a swing, you know, that it's just, I actually, you know, first of all, this isn't my chart. My computer's over there. We're on my streaming computer. These are just, you know, swings that where, like, the center of gravity, I guess. I'm not really too sure on these. The line that is in the chart, you can see that, where it shows you blue, then purple, then blue, then purple. What these are is it just shows you it's a whole moving average, which is, oh look, the market's going up, now the market's going down, market's going up, market's going down, market's going up. So these are just lines within the market just to show you, you know, what is going on and like how much time it took for it to become an uptrend down to a downtrend. You see all these numbers. Is there a quick undo button? Not really, BitKing. No, there's not. Like an undo as in you did something and you want to undo it. You're going to have to, like, if you put an indicator on, you're going to have to go onto the indicator list and get rid of it. Or if you add an expert advisor like the scanner, you're going to have to go into it and then delete it. There isn't like a control U, you know, to undo something. Down here is this, the stochastic, I can't say this word, I can't say it, stochastic scanners, I can't say it, it's a tongue twister for me, but all it shows you is that it shows you, like right here, that the price is at 10.1852, then the 82.404. It just shows you when it's overbought or when it's oversold. When it goes over these lines right here, you know, it's showing you that it's overbought or that it's oversold. I added a fib and want to undo. When you just click on it. So here, I'll show you. On this Fibonacci line that I drew, you have to double click it and make sure that you're on it. It's kind of hard, I know. And then hold on. Show me.
Here's an easier way.
Yeah, show me.
An easier way to do this. Objects list.
Oh, okay. So here, let me explain that to y'all. All right. So if you want to, let me just reiterate on what I said. That was a lie. You can go to right click, and then go to objects list. Objects list are the objects that you have physically put onto the chart. So when you click objects list, you can see, look, I've put 2 Fibonacci retracement lines on it. So I can click it and delete. See, there it goes. Click it, delete. So now look, it's gone, you know. So you can always right click and go to your objects list. I don't have any right here. One click trading, by the way, is something that you never want to do unless No, I don't even condone it in any way. Some people like to do one-click trading, but no. For my notes, what are the indicator names and volume parameters? The indicator names, there's a ton of indicators. There's a ton of them. You see trend and oscillators, and for volumes and custom, there's a ton of them. So I'm not really, there's so many. If you click the red line on the fib, you can delete it that way. See, the same thing. So if you bring up a new fib, I see what you're saying. Yeah, there you go. See, you can click on that red line, which is from where you draw it to where you end it, and then delete. So thank you for answering that. If you click the red line on the fib, we will discuss more in detail next week about indicators. Yeah, that's what we're going to be going into indicators next week. That is going to be our plan for the next week stream. Right now, we were just going over strictly MetaTrader 4. The ones. What do you mean the ones I use? Risk like All-Star. Let me see. Let me try to read from my notes. What are the indicators? Oh, okay. All right. We use, the stochastic scanner. Personally, I like to use RSI, and when I go into inserts, you go to indicators, and then I like to use, you go to trend, and then you go to moving averages. For the moving averages, you should have an exponential one and a smooth moving average. Exponential is at 8. So here, moving average, you see it's period. You can change that to 21 and to 8. 8 is simple and 21 is exponential. See? And I'm not going to put that because this isn't my chart. I'll do it on this one. Why not? All right, so charts. This is one of them that I use. I like moving averages a lot. So 21, simple, and let's change this one to blue. Bam. So now you can see, you see that line that I just made, right? And then you draw the next moving average, because you should have two, an exponential and a smooth. This one will be 8, and this one will be simple, and we'll change this one to red. So bam. Alright, so now what we got here on this is that every time that the blue is above the red, it's an uptrend, and when the red is above the blue, it's going in a downtrend. Vice versa. When the blue is up, it's a downtrend. When the red is up above the blue, it's an uptrend. So I actually did that opposite. These colors should be opposite. So change that to red, and then change that one to blue. My bad. There we go. Okay. So as you can see, the blue is above the red, so it's an uptrend, and then when the red gets above the blue, it's a downtrend. So the indicators you use: moving average of 200, 421, and exponential of 8. Say you predict the market will go up or down, and you want to get in a trade. How do you do it? Sorry if you've explained it before. Say you predict the market will go up or down, and you want to get in on a trade. Okay, so what do you think is about to happen right here? With looking without any type of charting out, you can see that the market went on a huge spike up. So let's just assume that it's going to go down. There's multiple ways you can do it. You can click New Order. It's right here. Or you can click F9, as it says, New Order. And then you can go in on a sell or a buy. The options are right here. Or you want to do it a different way. Euro USD is what we're looking at. So we come over here, look to Euro USD, double click, and it brings up the same menu to where you can actually call out your trades. When you do actually buy or sell, the trades go in on the bottom down here. As you can see on this trade, I'm negative $3.70 right now. It tells you all the information, the size, the sell. My stop loss, I don't have one. The price. The difference between, the difference between moving average and Bollinger Bands. So why don't we do it? Okay, so indicator, insert, Bollinger Bands. Let's click that. Okay, so let's not change anything. Medium, sea green. Let's change it to like purple. Boom. Okay, so Bollinger Bands pretty much just show you where price fights. I know, like, I sure color purple was a bad choice, but it kind of just shows you from the top and to the bottom of where the market will stay in between two Bollinger Bands. Moving averages just show you when one goes over the other, if it's a buy or if it's an uptrend or it's a downtrend. Bollinger Bands are kind of like trend lines to where it should be staying in. Obviously, it'll blow past it sometimes, but generally that's what Bollinger Bands show you, is that the market is in this range. Does that make sense? That's kind of like what they're used for. So it's just more lines to be looking at. It actually looks like a pattern. Difference with, okay, I answered that. See, okay, so Daniel King, I hope I answered your question. It actually looks like a pattern. I'm not sure what you mean. Alright, so what are some questions that you'll have? Because I'm pretty sure I'm just reiterating the same things at this point. Oh, well, I haven't really gone over the file, view, and insert. File, obviously we all know print, login. You don't really need to log into a community. You log into your trade account. When you log in, this is where you put in your Traders Way account information, and you have to make sure that the server is Traders Way Live. There's obviously, you can see that there's a ton of them once you type in Forex, but you have to make sure that you're on Traders Way Live or demo, because that's where you created your accounts at. That's where you're verified, and that's where you can deposit and withdraw money, right? So you have to make sure that you're on Traders Way, and obviously your login, which is your account number, and your password. So your password for your specific Traders Way account, not your Traders Way profile. Does that make sense? So that's all that is for. View languages, obviously you shouldn't have to change your language or whatever. The pair we're looking at, Pip King, is Euro USD on an hour. Are you giving out power legs? No. How would you use the Bollinger Bands to enter the market? You don't use the Bollinger Bands to enter the market. You use them as a tool. They really just show you, like, for, oh snap. No, I got rid of my chat. Go, come back, chat. Come back. Okay. Hold on. Okay. So Bollinger Bands just kind of show you the range. So like, for example, if you wanted to use the Bollinger Band that we're using right now, you can see that the top of the Bollinger Band is at 1.11878. So theoretically, you could set a parameter there, and that if it touches that, you could set a sell limit to where if it gets up to that point, that it's going to come back down. That doesn't necessarily mean that it's going to follow that rule. It can blow right past that Bollinger Band. There's, the market can do whatever it wants, but you have to make sure. You can use the Bollinger Bands as an indicator as to where you can get into the market or when you get out of the market. That's what it's used for. You don't use them as a total definition purpose of getting into a trade. They're just there. You know what I'm saying? I don't have the chat up anymore. What the hell is happening? My chat is spinning in circles. That's what it's doing right now. Okay. Oh, it says, okay, it's back. Got you. Okay. So, now we know what file does, obviously. View, languages, toolbars. All the toolbars are everything that we have discussed tonight. The magnifying glass, new order, all of this stuff. It's right there. Status bar. If you uncheck it, then the status bar is down here. So you can bring it right back. View the charts bar. You can get rid of that. Bring it right back. Okay. All right. And so it's almost 1. Okay, so symbols are obviously symbols are just currency pairs, euro to US dollar, blah blah blah. We're going to speed this up a little bit, guys. So view is just another way to pull up all of the stuff that we've discussed right here. Data window, navigator, your terminal, all of it. The market watch, it's all right here that you can bring it back up. It's just another way of doing it. Insert is where you insert your indicators. You can do the lines. Like I said, it's all right here again. So Fibonacci, retracement, you can draw a rectangle if you want for supply and resistance. That's where that is. Shapes, arrows, and then all of that. Text, label, everything that we have discussed down here is right there in insert. Charts, indicators list, it'll tell you every single indicator that we have. Objects, you can delete all of them. The objects list are, like that rectangle I just drew, delete, gone. That's just where you can get rid of the stuff that you draw. Can you do a quick analysis on what you would do on a naked chart real quick? Okay, real fast. Naked chart, bam. This is a naked chart, straight up. First of all, I get rid of the grid. I don't like grids. It looks so much cleaner. It's too much clutter on the chart. Go to properties. You change that bar down to red. Bear candle, red. Okay. Boom. So now, and then I change it to candlesticks. So now you can see downtrends and uptrends. Now this obviously gets a lot more, but that's what I do on a naked chart. Is first of all, I get rid of the grid. I change the bear candles down to red, and then I start throwing on indicators on top of it. For example, insert indicator, trend, Bollinger Bands, blue violet, great, bam. So, then you can start adding in whatever type of bullet or any type of indicator or expert advisors that you want to do. So that's where all that stuff is. Okay, how many indicators should you use? As many as you can read. Can you mark up a naked chart in your analysis style? Just did. What are some things that you use? Everyone, okay, got you. What are some things that you use to confluences on a setup? And another thing I struggle with is exit strategy, knowing when it's appropriate, say it isn't going to go anymore and take profit. You answered your question in the question. If you're saying to yourself that the market is about to start going into the different direction, get out. Take your profit. If you're in profit, take the profit and get into the next trade. You should never try to, you can define that as greed. You can say it's a light type of greed, but it's, it's a form of greed, honestly, when you try to stay into the market and make more money. So the exit strategy is when you do not believe in your trade anymore, get out. Take your profit, doesn't matter how much it is. Can you mark up and make a chart in your analysis style? I just did. Can you do a quick analysis on what you do? I did. On your screen, where we see that huge spike up, is that where I would place fib? Yeah, you can do it there. Obviously, you don't want to do it on like tiny, from here to here, because then obviously the fib levels are going to be like on top of each other, pretty much. So they need to be from the lowest low to the highest high, or the highest high to the lowest low. Okay, on your screen, Bonan, naked trading is the best. Real naked Forex, I promise it would change your trading game. Indicators are used a lot for just confirming an entry, what you think you see. That is exactly true, Wolfgang. You should be looking at indicators or indicators. They're not telling you when to trade. That's what they're used for, is just confirmations. That's all that they're there for. There's so many different ones that people have made. Use the ones that you like and stuff, the ones that make you money. Stick to what's best. Oh yes, and fib retracements where you start them. This being recorded for replay, yes it is vicious. You're right, that can be greed. One thing that really interests me though is longer held trades, lots of pips. Could you maybe give a small talk about on longer trades? And thanks for getting on this stream, dude. No problem, Wolfgang. And yes, it is being recorded. Longer trades or swing trades, and I'll just go over a little bit. When you're doing longer trades, you have to understand that you should never be looking at 1 minute and 5 minute and 15 minute and 30 minute charts, because if you're going in on longer trades and you understand that the market is about to downtrend, like for example right here, and you knew that it was about to downtrend, you would not be looking at, and granted we're looking at an hour, so looking at the 4 hour, you understand that this market is in a natural downtrend, so you don't want to be looking at the smaller time scales. If you believe that the market is going to go on a sell and you go in on a sell, don't babysit your trades. Do something else. Talk to someone or do something else, because I made that mistake, and it's something that I have already talked about before on a previous stream, that if you go in on a trade and you went in and you can explain why, believe in your trade, and if you're wrong, learn from that. But do not go in on like an hour or 4 hour, 8 hour long trades and then stare at it for the first 3 hours, because it's going to go negative. Pretty much it's going to go negative, because the market is going to do all of this, but it's still going to be going down, or it's still going to be going up, so your trades are still going to not look as well as they should. And shorter trades are obviously the vice versa. You would not want to be looking at days and hours and stuff for smaller period trades. So that's, I hope I answered that question. Can you show us how you would draw up GDP JPY on the hour chart? Not right now, I'm sorry. We'll get into that. When marking a fib, if the lowest low is on a bullish wick, is that where we mark from, even if it's bullish? Yes. For those who missed the stream, what are your moving average settings again? Okay, so 8 and 21. 21 is simple, and 8 is exponential. Am I right on that? Jordan, am I right on yeah, 8 is exponential, right? Okay, so 8 is exponential and 21 is smooth. So I'm going to do it real quick. Tool. Okay, well, I was showing, we'll get into that, but I was strictly on what I'm talking about. 8 is simple, and you change this, or you can take it to blue. So bam, there it is, and then insert another indicator, and then trend and moving average. Then you change this one to 21, exponential, and red. There we go. Okay, so when the blue is up, it's an uptrend, and then when the red gets above the blue, it's a downtrend, as you can see. So that's what those are for. 8 is exponential, 21 is smooth. So what are you moving? Okay, so watch the day chart. Use lowest 30-minute for entry. That would be highest for entry. Sweet, that helped out a lot. Cool. Can you go over on how you would enter into a short-term trade? A short-term trade, you would be looking at no more than 30 minutes, and you would be babysitting it. You would be looking at 1 minute to snipe the entry, which means getting in on the 1 minute, like on a 1 minute candlestick. You want to either, if you, like for example, if you thought it was going to be a sell, you want to get on the top of that candlestick. Understand that even in that 1 minute, price is going to fight in that one candlestick that you create, right? So you want to, obviously, if you're going in on a sell, you don't want to buy here. You want to buy here at the top of that candlestick. So that's what sniping your entry point is. That's what I explained, or that's what I mean. 21 simple or exponential? 21 is simple. 8 is exponential. You said one thing and did another thing. Oh well, I'm sorry. There you go. It's answered in the chat now. 21 is simple and 8 is exponential. I'm very sorry if I mixed that up. My bad. Okay, so anybody else? It's about to be 1 o'clock, guys, so Christopher Terry's about to hop on. We're going to have to go ahead and kill this stream. Every day, guys, we're going to be doing more information for people, different types of, training from, beginner to intermediate to a bit more advanced stuff, because there's so many people in IML now. Shout out to every single one of y'all. Y'all are all a part of the family, guys, and everybody is, working together to understand these charts and stuff, guys, and that's what we are trying to provide is so much more potential for everybody to understand. This is going to be recorded, guys. I talked so much. I had so much filler, and I know that. I'm sorry, so just skip through the video as much as you can. Get all of your teammates plugged into this information. Guys, plug into this information every single day. I don't care what you have to do. Do not go out and party. Do not go out and watch Netflix, or, stay in and watch Netflix, or do whatever. Plug into this stuff, guys. Let's all become Forex traders. Let's all become master traders like Christopher Terry, and do everything that we can. Make sure that you follow the DFW Trade House, guys, on Facebook. Plug into me, Michael Miles on Facebook, Emery Holmes, Jordan Morgan, Marissa Cortinez, everyone that is on the DFW Trade House page. We're here to try to help everyone, guys, and not even just us, Jason. I mean everyone. There's people everywhere that know how to trade, that are just waiting to answer questions for you guys. Dope content, yeah, guys. So there's a Forex basics playlist. That's pretty cool. I like that. No Netflix and chill. No, bro. Forex and chill. You know what I'm saying? Get your boys together. Measure out the things that, watch the same charts, call out the same, call out trades to your homies, like, be in the group together, make money together, guys. Don't hold this information to yourself. If you find something out, share it with people, you understand? But do it with the people that you trust and that you're right next to. I know I was saying earlier, don't listen to other trades, but you can listen to trades of people. You can listen to anybody's trades if you want, but you have to trust them, and you have to understand that they're going to be there for your best interest, guys. So, guys, I love all of you. This is going to be recorded, guys. Make sure that you check out and follow the DFW Trade House Twitch page and the Facebook page. And everybody, guys, I hope this helped everyone, and I want everyone to have a wonderful night, guys. Let's get to the trading, guys. Let's get to the marketing. Let's start making money. Let's turn GV up, guys. Like, let's turn IML up to the next level, and that's going to start by showing documentation over conversation with the numbers and the product, or I mean with the, with the production that you create through the Forex market, guys. No demo, guys. Let's go live. Let's make money. All right, guys. I love you all. Peace out. I'm going to go ahead and kill this now.